Your family secure.
Welcome back. You're still tuned into markets today. Let's get to all of the other top stories that we're tracking. The fourth headline today, a steady operational performance from its India operations helped Hindalco post what was a strong Q3. The company's aluminium and copper EBITDA beat street estimates. Nigel's here with a wrap on the company's performance.
Well, Hindalco's India business delivered its numbers and it looked quite good. Remember, the Novelis business was quite disappointing, so the street was pegging its hopes on the India business. And let's break this up into four broad points. One is the aluminium business. If you take that upstream as well as the downstream, put it together, well, on a year-on-year basis, it appeared a little bit disappointing, but on a sequential basis, those numbers improved. And the combined number between both of them was more than 1,700 crores, which was more than what the market was anticipating. That was positive. The second factor is the copper business, which is a smaller part of the EBITDA contribution, but that looked good as well, coming in at more than 540 crores in a single quarter, which was better than the 515 that we were estimating. High amount of value-added steel and better TCRC margins, that's what helped them, so led to the copper business doing quite well. The debt number was down marginally on a quarter-on-quarter basis, so that as well goes down positively. And finally, the street is anticipating a far improved performance in quarter four. So put all these four factors together, explains why Hindalco did well.
Okay, all right, Nigel, thanks very much for that. Well, Cummins hit life highs today after delivering a strong third quarter driven by strong demand and healthy growth both in the domestic and export revenue. Net profit was up over 49% and revenue was up over 25% year-on-year. The company said it is on track to meet its FY23 revenue growth and is cautiously optimistic in the short to medium term. In addition, the company continues to be watchful on the softening in the capex cycle. The stock was up close to 7% today. Well, the other stock in focus was Trent. The shares surged over 8% after the company registered its highest ever quarterly revenue in the third quarter. Manglam is here with the details on that.
Well, good performance coming in on the top line from Trent. Remember, this is the company that runs all the West Side stores and the Zudio stores across the country. Also has a joint venture with Zara. So a big surge in their revenues is what we've seen. Over 54% jump. This, of course, comes on a low base and a high seasonal quarter. But, we did see some compression in their gross margins owing to the weakness that we're seeing in the input cost inflation environment, as a result of which the EBITDA has grown just by about 18%. Remember, same time last year, they had a lot of benefits in terms of rent waivers, etc. as well. All of that has come back in terms of expenses, as a result of which there has been some margin compression from 18% to 14%. The net profit, however, has grown by 36%, further aided by other income, which has doubled too. But importantly, the West Side same-store sales growth for the third quarter has been 17%, and that is what the street likes, notwithstanding the margins, notwithstanding the valuations as well. But valuations and urban slowdown may be a bit of a concern, and that's what Jefferies says too, because after this move today, the stock trades close to around 77, 78 times one-year forward price to earnings. It's off its 52-week high by almost 15-odd%. But then again, still at elevated valuations. Today, the street likes these numbers. Let's see when the valuations come in the way.
Okay, all right, Manglam, thanks very much for that. So that's on Trent. But on to the fifth headline today, equity mutual fund inflows have surged 70% sequentially to claim what is a 4-month high above the 12,500 mark. Pavitra Parekh has been tracking this story. She's here with a wrap.
Mutual fund data for the month of January has come in and it looks up. It's above 12,500 crores, which is a sharp increase from the around 7,200 crores that we saw in December. In fact, if you take a look at this figure, you can see it's come in at a 4-month high as well. So there you have it on your screen. It's a 4-month high for the net inflows that have come in. A key positive this time is that the large cap funds have clocked in inflows of around 700 crores. Remember, this is after 2 straight months of money moving out of this category. So that is important to note. Let me move on to the debt category now. Outflows continue here. So the figure has come in at 10,300 crores this time, with around 5,000 crores being pulled out from liquid funds alone. Now, of course, it looks much lower if you compare it to the last month chart. But, December is when we actually do see a lot of quarter-end activity by corporates. So that wouldn't really be a fair comparison. Do keep that in mind. That's why you're seeing that big sort of decline in the outflows. The hybrid category has seen a move higher this time as well. So we have a figure of 4,500 crores. This is versus the 2,250 crores that we saw in December. And a figure that's quite surprising is that we have a big ETF outflow number this time. So it's come in at 1,700 crores. This is versus the 8,800 crores of inflow that we saw this time. So that is quite a jump that we've seen. Now let me take you through the total AUM managed. That has come in at 39.62 lakh crores. This is for January, and in December we saw 39.88 lakh crores. So there is a little bit of a fall here, but I will end with some positive news. The SIP contribution continues to move higher. It is another month and another record there, and the figure has come in at 13,856 crores. So all in all, a good month for the mutual fund data there.
Okay, all right, Pavitra, thanks very much for that. In fact, we did catch up with Sunil Subramaniam, MD and CEO of Sundaram Mutual Fund, to make sense of this strong January data. Here's what he said.
I think a lot of NFOs the mutual fund industry has been launching. So I think these NFOs have been garnering increasing collections because of the visibility, the advertising campaign around these things. That's number one. Number two is that the data for India has been robust and strong on the economic side. So domestic investors continue to repose faith because they see a good future. So all the uncertainty from mid-December, which has come from the FIIs booking profits and then the Adani-related selling by the FIIs, has not hurt the sentiment of the domestic investors. If you look at the allocation pattern, right, I don't know the data and the breakup, but generally this is the tax season. So ELSS funds typically see an uptick.
Okay, well, that is some opinion with regards to the AMFI data that came out for the month of January. But before we wrap, we at CNBC TV18 would like to thank you, our viewers, for your sustained support, trust and loyalty, especially when it comes to the coverage of big events that shape and determine how you handle your personal finances and your businesses. Thanks to your unwavering patronage, CNBC TV18 has once again crushed competition on Budget Day this year. Your channel has enjoyed a solid 89.9% viewership through the day. That's not all. We have also emerged the leader in the business news segment with 88.2% viewership during the Finance Minister Nirmala Sitharaman's budget speech. Again, this feat would not have been possible without your consistent support, engagement and steadfast trust in us. My team and I thank you all for giving us this opportunity all year, every year. It is truly a huge moment of pride for all of us here at CNBC TV18. Thank you all for the privilege of letting us deliver the news that matters to you, with the analysis and perspective that makes a difference to your life. With that, it's a wrap on this edition of Markets Today. Thanks very much for watching.